Welcome back, and you're with Business Today, and as we bring you regular updates from the Colombo stock market, today we will talk about how the market has performed during last year and its trends and what we expect in future. So for that we got Mr. Dimantha Mathew. He is the head of research at First Capital Holdings. A very good evening to you.
Good evening.
Right, so to start this conversation on a positive note, even though we have been experiencing a declining trend in the stock market during the last whole year,
Yes.
your recent report has highlighted a lot of positives. Can you explain this further?
Yes. So basically, we look at the market in three angles. So we look at it on the political, economical, and external angles. If you really look at the external outlook, all this time it has been slightly negative towards Sri Lanka, but now we are starting to see positives. If I explain further, if you take the global agencies, IMF, World Bank has recently downgraded global growth, specifically due to the downgrade in the growth rates in the US, which is also prompting Federal Reserve to possibly slow down the rate hiking cycle that they are going through at the moment. So with that, what happens is during the last 3-4 weeks seen the yields of the US Treasuries also dropping. So with it, what happens is the global funds which were going towards the US and strengthening the US dollar is starting to return back towards the emerging markets. So if the rate hikes slow down, and there are some surveys saying that there may be even one or even no rate hikes this year, so which is a positive news for Sri Lanka and its currency as well. And then the fund flow is likely to come more towards the emerging markets, which will be a benefit towards countries like Sri Lanka. And also, if you take on the economic front, okay, so we've come out of a sort of a crisis situation. Now we are on a stabilizing phase in terms of the economy and tourism earnings and all that so on. So probably by next month or the following month we will have the IMF agreement in place, and we'll have the debt inflows coming back into the economy, and we are looking at redoing our reserve numbers. So with that side, the economic side also is likely to start showing a positive picture. And also on the political side, we are seeing some sort of stability settling in. So all these factors are likely to have a better 2019 than 2018, of course.
Great to hear that. So any particular sectors that you can be positive on?
Yes, of course. So one of the sectors that we are positive on is the banking sector, because I think over the last 2 years you would have seen that the banks had so many rights issues, and they have raised a lot of funds, and even over the last year we will see too much of credit growth also coming in place. I think finally it's likely to end at a credit growth of around 14%, which is not too high. So the banks, especially the larger banks, currently have ample room for credit growth to happen, and also they've had better margins over the last few months as well, with the increased interest rates. So we are expecting especially the bigger banks to actually do well. And also I think we are starting to get positive on the consumer side, because we see that towards the second half of the year, with this stability taking place, and our budget also likely to come in March, and elections also possibly around the corner. we see there likely to be some sort of increase in the consumer demand, and money circulation among consumers is also likely to increase. So these sort of counters, similar to Nestle, so consumer related counters are likely to also benefit. So we saw the dollar depreciate last year significantly, or the rupee depreciate rather significantly. So we are also focusing on dollar income generating companies. Yes. Basically dollar income generating companies such as the apparel companies, textile jersey for example, they're earning in dollars. Yes, we are expecting these sort of companies to do well at the moment.
So you spoke a lot about the positive sectors. How about the negative side of it? What are the sectors the investors should be cautious?
Yes, so one of the sectors that the investor should be cautious is on the construction sector, for example. We've recently seen a significant slowdown with the overall economic slowdown happening. Construction is almost 10% to 11% of the GDP, which has seen sort of a contraction in the last few quarters. So we think investors should be careful of construction sector and building material related counters, and also with capital adequacy measures being increased by the central bank within the diversified financial sector, especially the smaller finance companies and possibly even the very small banks. We think investors should not really get into those companies because they are likely to have to raise more capital. And also I think real estate development also has slowed down a bit. So with that, I think those companies also investors should be a bit cautious.
Right. So it's not only the Colombo market. Most Asian markets were down during 2018. So when you compare our country with the rest of the countries in the region, where do we stand?
Yes, so if you look at last year, I think the index sort of came down about 6 to 7%, and currently trading at very attractive levels. Right. But if you look at most regional countries, has seen significantly higher decline, especially because the global fund flow was towards US. If you take India, if you take Bangladesh, or even Vietnam, there are significant declines in the stock market. Returns were actually negative. So now even at the current situation, if you really look at it, Bangladesh and Vietnam is trading at around 15 to 16 times earnings, and if you take India, it's trading at around 22 times price to earnings ratio. But Sri Lanka is currently trading at around just near 8.6 times price to earnings ratio. So very attractive at the moment.
Right. So we all know that the stock market has cycles.
Yeah.
And as we have already been having a few bad years, I would say, where do we stand in the cycle right now?
Yes, so as you know, the stock market usually goes through upward cycle and a downward cycle, so it's never generally trades at the fair value per se. So either it overshoots or underperforms. So at the moment, after a few years of negativity, what we've seen is that we've come to a stage of depression. It's called the psychological term for it is depression in the stock market cycle. So what happens is usually this is the place where investors think that all hope is lost. But if you really look at it, that is the exact place that investors should ideally come into the market and start investing in the market, because that's where generally the market bottoms out, and then you have the upward cycle coming in, so you are likely to catch the bottom if you come in at the depression stage. So what we feel is we are at the depression stage now, moving towards the disbelief stage. So these cycles, psychological levels have been researched thoroughly in the Wall Street and has been published. So in line with that, we feel that in the cycle we are moving towards the disbelief stage, and then comes the upward stage where it's the hope, and then the optimism comes in after that. But what happens is, when you come to that stage, about 30 to 40% of the upward cycle is already over. So I think current stage is the best stage that an investor should get in, and it's the less riskiest stage for an investor to come in.
Great. So let's keep our fingers crossed, and let's hope for the best.
Yes.
And thank you very much for being with us today, and thank you very much for your valuable insights.
Thank you.
Yes, with that we got to wind up for today. So thank you for being with us. Take care and good night until we meet you next week. Same time on Channel I.